Imagine the scene. A shadowy trading floor in New York. Algorithms firing off sell orders like bullets in the night, driving the price of silver plummeting to levels that scream capitulation. The banks want you to panic, to believe the bull run is over, that silver's meteoric rise was just another fleeting bubble bursting in the wind. They're flooding the paper markets with contracts, creating an illusion of abundance, while the real story unfolds thousands of miles away in the vast, humming warehouses of Silicon Valley and beyond. But what if I told you this price smash isn't a crash, it's a desperate cover-up? While traders stare at flickering screens, something monumental is happening in the world of artificial intelligence. A revolution that's silently raiding the global silver vaults. Data centers, those colossal brains powering the AI boom, are devouring silver at an unprecedented rate, turning what was once a precious metal into the lifeblood of our digital future. This isn't just about gadgets or jewelry anymore. It's a heist of epic proportions, where tech giants are hijacking the supply chain, igniting a shortage that could propel silver prices to $150 an ounce or higher. In this deep dive documentary, we'll uncover the hidden mechanics of this AI silver heist, peel back the layers of how data centers are consuming vast quantities of this irreplaceable metal, crunch the numbers that expose the impending global deficit, and reveal why the bank's manipulation is about to backfire spectacularly. The paper game is crumbling. The physics of demand is taking over. Welcome to the story of the AI Silver Inferno. To grasp the magnitude of this heist, we need to journey into the heart of the AI revolution, where data centers stand as the unsung heroes, or villains, depending on your perspective, of our increasingly intelligent world. Picture these facilities. Sprawling complexes larger than football fields, stacked with rows upon rows of servers humming with the power to process. Billions of calculations per second. These aren't your average office computers. They're the engines driving everything from ChatGPT's witty responses to self-driving cars navigating city streets. But what most people don't realize is that silver is woven into the very fabric of these machines, in the multi-layer ceramic capacitors that stabilize power flows, in the conductive pastes that bind circuits with unmatched efficiency, in the high-speed interconnects that shuttle data at lightning speeds. Silver's unparalleled. Conductivity makes it indispensable. Traditional data centers already sip from the silver well, but the AI era has turned that sip into a gulp. AI servers, with their dense arrays of GPUs and accelerators, require 2 to 3 times more silver than conventional setups due to the intricate cooling systems and complex wiring needed to handle the immense heat and data throughput. A single hyperscale data center, like those operated by Amazon Web Services or Microsoft Azure, can consume between 8 and 12 million ounces of silver annually just in their operational infrastructure. And this is before we even touch on the energy side of the equation, where the real devouring begins. As AI workloads explode, these centers guzzle electricity like never before, with the International Energy Agency estimating that total data center power use could double to nearly 945 terawatt-hours by 2030, and AI accounting for half of that surge. To meet this voracious appetite sustainably and to appease regulators pushing for green tech, companies are turning to solar power on a massive scale, blanketing vast tracts of land with photovoltaic panels. Each panel relies on silver paste to conduct electricity efficiently, and a single 500 megawatt solar array, enough to power one major data center, demands around 300 metric tons of silver, equivalent to nearly 10 million ounces. Multiply that by the hundreds of new facilities springing up worldwide, from the deserts of Arizona to the plains of Texas, and you begin to see the scale of the heist. Tech titans aren't just building smarter machines, they're orchestrating a covert raid on global silver reserves, pulling the metal from mines straight into their digital empires, leaving the rest of the world to scramble for scraps. But let's pull back for a moment and ask the critical question, why silver? Why not copper or some engineered substitute? The answer lies in the unforgiving laws of physics and chemistry that no amount of innovation can fully circumvent. Silver boasts the highest electrical and thermal conductivity of any metal, making it the gold standard, pun intended, for applications where efficiency is paramount. In data centers, where every microsecond of latency costs millions and every watt of wasted energy balloons operational bills, silver ensures seamless performance. It's used in the solder alloys that connect chips to boards, preventing failures under the extreme stresses of AI training models that run for weeks on end. It's layered into the thermal interfaces that dissipate heat from processors churning through terabytes of data. And in the solar panels feeding these beasts, silver's reflective properties and resistance to corrosion make it irreplaceable for capturing sunlight and converting it to power without degradation over decades. Attempts to thrift silver, industry jargon for reducing usage, have hit hard limits. Cut too much and efficiency drops, panels fail prematurely, or servers overheat, leading to catastrophic downtime. We've seen this in reports from the Silver Institute, which highlight how photovoltaic demand alone gobbled up nearly 200 million ounces in 2024, with no signs of slowing as AI-driven solar installations accelerate. The tech giants know this all too well. Companies like Google and Meta are locking in long-term supply contracts with miners, quietly amassing stockpiles while the public market pretends abundance. This isn't mere opportunism, it's survival. As AI integrates deeper into our lives, from personalized medicine to autonomous logistics, the demand for these data centers will only intensify, creating a feedback loop where more AI means more silver consumption, which in turn drives even greater innovation reliant on the metal. The heist isn't accidental, it's engineered, a calculated move by an industry that's outpacing global supply chains and leaving traditional sectors like jewelry and electronics in the dust. Now, let's dive into the numbers, the cold, hard math that turns this story from intriguing to alarming, proving that the AI silver heist isn't a distant threat. It's happening right now with deficits that could eclipse anything we've seen before. Global silver mine production has stagnated at around 813 million ounces for 2025, according to the latest projections from the Silver Institute, barely budging from prior years, despite soaring prices. Recycling adds another 180 million ounces or so, but much of that comes from dispersed sources like old electronics, where recovery rates hover below 20% due to the microscopic quantities involved. It's like trying to mine dust from landfills. Total supply? Roughly 1 billion ounces, give or take. On the demand side, industrial uses already claim over 600 million ounces annually, with electronics and photovoltaics leading the charge. But factor in the AI boom, hyperscale data centers alone are projected to add tens of millions of ounces in new demand each year as facilities multiply. Consider this conservative estimate. If just 20% of new data centers rely on silver-intensive AI hardware and solar integration, that's an additional 50 million ounces sucked into the vortex by 2026. Bump it to realistic levels, with AI workloads comprising half of all data processing as forecasted, and we're looking at 150 million ounces of incremental demand from this sector alone. That's on top of the existing 1.1 billion ounce total demand for 2025, which already outstrips supply by 115 to 120 million ounces, marking the fifth consecutive year of structural deficits. Cumulatively, the world has burned through over 800 million ounces of above-ground stocks since 2021, draining vaults to critical lows. The Silver Institute warns that without massive new mining investments, which take a decade to materialize, this gap will widen into a chasm. And here's the kicker. AI isn't linear growth. It's exponential, with companies like NVIDIA shipping millions of GPUs quarterly, each laced with silver components, and data center construction booming. Think Amazon's $100 billion investment pipeline, the heist accelerates. If global data center capacity doubles by 2030, as experts predict, silver demand from this megatrend could consume 25 to 35% of annual mine output, leaving zero margin for solar expansions. EV batteries, or even basic consumer electronics. The math doesn't lie. We're staring down an extinction-level event for affordable silver, where supply chains snap and prices ignite in an inferno that burns through. 150 per ounce like kindling. As the heist unfolds, the tension builds in the shadows of geopolitics and economics, where the race for silver exposes vulnerabilities that could reshape global power dynamics. Mines in Mexico and Peru, which produce over half the world's silver, are plagued by labor strikes, environmental regulations, and political instability. Mexico's recent ban on new open pit permits alone threatens to shave millions of ounces from output. Russia, another key supplier, faces sanctions that choke exports, while China's state-backed firms quietly consolidate control over African and South American deposits, hoarding for their own AI ambitions. The US and Europe, desperate to secure supplies for their tech sectors, are invoking acts like the Defense Production Act to prioritize domestic mining, but new projects in Nevada or Alaska won't yield ore for years. This scarcity breeds desperation, tech CEOs lobbying governments for subsidies, miners demanding premium prices, and investors scrambling to front-run the squeeze. But the banks, those architects of the paper illusion, are fighting a losing battle. Their short positions, built on leveraged futures, crumble as physical buyers, data, center builders with deep pockets, bid up spot prices in Shanghai and beyond. We've seen it before with palladium in the 2000s, when catalytic converter demand sent prices soaring tenfold. Now AI is the new catalyst, amplified by a supply that's inelastic and dwindling. Ore grades have fallen from 15 ounces per ton 2 decades ago to just 4 today, meaning miners must move mountains, literally, to extract the same metal, jacking up costs and environmental tolls. Recycling? A myth in this context. Silver in data centers and solar panels is locked away for 15 to 20 years, sequestered in infrastructure that's too valuable to scrap prematurely. Governments won't stand idly by. Expect declarations of silver as a critical mineral, with export controls and strategic reserves that divert supply from retail markets to tech hubs. This isn't just an investment story, it's a thriller of national security, where the AI arms race could spark trade wars over a metal once dismissed as gold's poorer cousin. Yet amid this gathering storm, there's a silver lining for those who see the heist coming. Strategic positioning that turns chaos into opportunity, allowing savvy individuals to ride the inferno to unprecedented gains. Forget the flashy numismatics or collectible coins peddled by dealers. In an industrial squeeze like this, purity and weight reign supreme. Opt for industrial bars or government-minted bullion, 100-ounce slabs from reputable refiners that command lower premiums and higher liquidity when the crunch hits. Why? Because when a data center procurement team needs silver for their next solar farm, they don't care about engravings or mint marks. They want atoms, meltable and malleable for nanopowders and pastes. Stacking physical now, at whatever the manipulated spot price lingers, maximizes your ounces before premiums explode. Then pivot to mining stocks, but choose wisely. Unhedged primaries like those focused solely on silver, not byproducts from copper or zinc operations. These companies, with assets in stable jurisdictions like Canada or the US, offer leverage. If silver doubles, their profits could quadruple. Sending shares parabolic as tech buyers snap up equity stakes for supply security. Avoid hedged firms locked into low-price contracts. They're the losers in this game. Geography matters too. Clean, silver from allied nations qualifies for EV and data center subsidies, trading at a premium over dirty sources from volatile regions. As for timing your exit, ride the S-curve of the AI boom, 7 to 10 years of supercycle demand, but watch for breakthroughs like silver-free, alternatives in PV, or quantum shifts in computing. When headlines scream of a silver-free data center revolution, that's your cue to rotate into real assets like land or diversified portfolios. But for now, in late 2025, with silver hovering around $60 after its record run, this dip is a gift, a brief window before the next leg up engulfs the market. The climax approaches as we stand on the brink of 2026, where the AI silver heist reaches its fever pitch, and the inferno blazes toward $150 per ounce. Imagine the headlines: tech giants hoard, silver amid global shortage, data center boom drains mines dry. Banks' paper suppression will shatter under the weight of physical reality. Arbitrage, from Asian markets closing the gap, short squeezes forcing liquidations, and investment inflows from funds recognizing silver's dual role as monetary, hedge, and industrial powerhouse. Volatility will test your resolve, with wild swings designed to shake out weak hands. But remember, does a $5 drop alter the electrons flowing through a GPU? No. Does market noise replenish exhausted ores? Absolutely not. The fundamentals are ironclad, inelastic, and accelerating. As AI permeates every facet of society, revolutionizing healthcare with predictive diagnostics, transforming finance with algorithmic trading, even reshaping entertainment, through generative art, the data centers, enabling it all, will continue their relentless consumption, pushing silver into the stratosphere. This isn't speculation, it's inevitability, a convergence of megatrends where human ingenuity meets elemental limits. The heist is in full swing, but you hold the key to turning theft into triumph. Stack wisely, invest boldly, and watch as the inferno forges a new era of wealth. The banks played their game. Now physics and AI claims victory. Thank you for staying with me till the end. Here on The Scope, we dig past the headlines and uncover the hidden layers history tried to bury. If this documentary made you think differently, hit subscribe. Your support tells me to keep creating deeper investigations. Share this video with someone who loves powerful, untold stories. And leave your thoughts in the comments. I read everyone. A new, even stronger documentary is already on the way. So stay curious, and I'll see you again soon, right here on The Scope.